Hi, this is Randy Finney with the Right Side of the Chart, and today is Monday, March 23rd, 2020. What we're going to do in this video is do an update on gold, silver. We'll hit on all the metals if there's time, platinum, palladium as well, but mainly I want to focus on gold and silver, and really mainly gold because that's our official trade proxy. That is my preference right now for a swing trade and a long-term trade. To just give you the quick 30-second story, if you're busy, I'm going to go over levels, developments to watch, how the dollar may affect gold, all that kind of good stuff in the video. But here we are. It looks good. We went long off the reversal here that other day. It was Monday the 16th, off the reversal on 136.37. That was support, and so far so good. Stop. At this point we hit our second target the very next day, first and second targets. But we're now pushing above. Well, we popped above. We're trading right at that T2 level now. So again, T2 has already hit once. This is a second tag of that level, giving you a second opportunity if you're just an active trader and want to get out. I'll go over some short-term charts today, some potential scenarios, but longer term, I'm going to hold this away. So let me just talk real quick fundamentally, and we're going to get into a little more of the fundamentals of gold when we get to the analysis of the US dollar. But what I'm seeing lately is the Fed coming in and pulling all stops. They're going to do whatever it takes to keep this market, to keep, not the stock market, more so, they're one of their mandates is financial stability in the financial markets, and so they are concerned undoubtedly about the credit markets, as am I, and so they're providing whatever liquidity they can in order to keep the credit markets functioning. And by doing that, I think although the correction in gold was technically induced with divergent highs and all that negative divergence, overbought conditions, I think a lot of the big sharp drop was forced selling, as I mentioned recently, with gold dropping in line with the stock market. A lot of margin calls, forced selling, liquidations like that from both individuals and institutional investors. And so so far so good on the trade. Nothing to get excited about. It's only a 5% or so profit when that second target was hit. But gold is in a bull market, and I'll get to the long-term charts in a second. Let's start out with the very near-term charts. We'll go from there. All right, so I posted on the site today both silver at resistance 1325, pretty good resistance too, and gold here at resistance as well. And when I posted it, we were right here at that trend line. Let me grab that post. Okay, here's those posts. Just a reminder for those new to the site, when I attach multiple charts, they call this a gallery attachment, where you can add up to a dozen or so charts. Sometimes it's usually only 2 or 3. They don't show on the email notifications, and that is to keep your inbox. It would be too large, too many attachments going out. So I always encourage you, when you get an email and the email notifications, click on the title in your inbox of the post. It'll bring you into the site. If you're already logged in, it'll bring you right to that post. Otherwise, you can log in and check it out. Here it is. So this is short-term stuff, and I tried to make that very clear in that update that I remain intermediate to longer-term bullish as of now. If anything changes, I'll let you know. But I mentioned, in the very near term, gold has rallied. This is a daily chart of GC, gold futures. That's all I had posted in that update, but I'm going to go over the other charts now. So we hit this back test of this trend line right there, and set of reactions likely. And as long as we don't pull back much more, that would be an ideal spot. Even better for our long trade if we don't pull back that much. It'll just show you a more aggressive bid for gold. But there's that possibility, pull back to that 1538 level. It's pretty decent support, nothing great, but just a potential, for a quick pullback trade. Or like I said, if you're long gold, you can raise stops a little, somewhere maybe a little bit below that level. Give it some room because everything's volatile now, and let it run. So that's what it looks like on the daily. We zoom in down here, and there's your trend line as well. Oops, that went away. Zoom in down here. This is a 60-minute chart of GC. And so what I said here is gold has rallied into the 1565-ish resistance, because that's very well defined. I'm going to zoom back out and just draw on this chart for a second here and show you that's it. Says 1564.81, so we'll round that up, call that 1565, I'm sorry. Reaction from below or above, a gap right there, reactions from above. It was resistance here, resistance once broken becomes support. So I'm just showing you, these are what I see, that tells me that is a level that is likely to come into play as resistance, at least on this first tag. We haven't been there in a while. And then if you pick up on my terminology, the difference of a trend line and a potential downtrend line. Well, why is that a potential? I drew it. Why isn't it a trend line? Well, I always say, and this is just me, that it takes 3 reactions to validate a trend line, as any 2 points can be connected in random. So we were there. We were at that. It would come in and certainly draws nice off these 2 points, as well as on that daily chart, and it comes in at price resistance, and again a pretty significant resistance. Nothing super solid, but worth noting. And then so if we get a reaction, that was whenever this chart was taken, before that post at 1:35 p.m. Right down here on the bottom, 1:35 p.m. Eastern time. And let's go back to the current chart there on GC. And so far you have the making. There is a reaction. That may be it, or there may be more to come. A reaction I define as either a consolidation and or pullback off when you're looking at a run up to a resistance level from below. Let me zoom in a little tighter on this chart here. And that's it. Nice clean trend line. Now you have a reaction, meaning that 60-minute candle, it got checked there almost exactly right where I took the screenshot was a high. We were just a little beyond that trend line in that 1564.65 level right there. And so far a reaction as expected. So if you trade gold futures, I don't need to tell you how much, it's not a huge move, if you're trading GLD. But that is, I'm just eyeballing it, it's probably about a 1% or better pullback. I can't measure it exactly without moving those lines, but close to a 1% drop now. So that's a pretty nice trade if you are trading gold futures. Again, I don't have to tell you how much money that puts in your pocket to get a 1% pullback in gold. And look, at minimum, I think right here, 1549. That's a mild support, I'll call it. And then if it's a deeper correction, all the way back down here. So as long as so anywhere in here. So how do you trade it if you are actively trading? Well, you have a stop just above, a relatively tight stop to play the pullback, and then you can either trail down as it goes and try to hold out for maybe a bigger run, move or drop, I should say, all the way down here to this support zone between 17, 15, 24. And if you're an active, not an active trader or a typical swing trader investor, and you're long that GLD trade, and it's confusing as to why I might post a potential short pullback trade, it's again short-term stuff versus long-term. Ride out any pullbacks. I think as long as gold comes into, let's just draw a trend line right here. There's an uptrend line off the lows. Let me make that official on this chart, so it'll be on the next chart. Right there, you have the working of an uptrend line coming in with some price support, and that would be the ideal scenario if gold were to have a deeper pullback again. That this support zone and or that trend line support right there holds, and then you get another leg up, and then of course you go on. Now that we've had some validation here, a little deeper pullback and or a second test would help to further validate that trend line. And then if you after you validate it, you go on to break out, that would be a buy signal and likely open the door for the next leg up. Whereas, so you can see is what I've done here is drawn pretty much a symmetrical triangle pattern defined by the downtrend line right there and this uptrend line right here, and this is a symmetrical triangle pattern. So respect whichever way it breaks. And as I said, where do I start not being so keen on this gold trade? Well, like I said, if it breaks that level, and of course if it breaks the lows there, and I'll get to the GLD chart for you guys in a second. I know a lot of you don't trade gold futures, but there's a lot of lines and levels I have on this chart, so I wanted to watch that. Okay, there's the GLD again. This is the daily chart where our official trade is based off of. And as I mentioned, even when I took that, we added this trade, I said, look, gold could easily continue on down. There's a really nice support zone here, about 128 to about 130. Long-term support on gold as well. You'd have a trend line that come into play if and when it got there. A longer-term trend line here on the daily chart. So if gold does that, and I don't decide to pull or modify the stop, we go down to this level, I will very well maybe looking to add gold back as another long trade. And I also may, sometimes I will, suspend or modify the stop. And as always, it's up to you. Whatever I do on the official trade is based on what's going on at that time. It is not reflective of your entry price, your risk tolerance, your price targets. Even price targets. If you are only targeting an early target, you should use a tighter stop. This stop was based on the final target at the trade, which is usually the case on the suggested stops on the trade. They're not for anyone just looking to get a quick 3-5%. That in that case you should have used a tighter stop. And to where I like at least a 3-to-1 minimum 2-to-1 risk reward ratio. In other words, don't risk $1 of loss to make $1 in profit. To do that, you need to bat over 500, or have over a 50% success rate on your trades. That is possible, but it's when you use a higher risk reward ratio, like a 3-to-1 or better, then you really only have to be right just over a third of your time on your trades, and you can still be profitable. All right, so that's it. And same thing I've talked on many times before. Gold is in a bull market, and that's why I didn't wait for a full pullback all the way to that trend line. We still could get it. If the market takes another dump, there's a lot of factors that could bring gold down at this point. We're not out of the woods yet, but gold remains in an uptrend. An uptrend is simply defined as a security making a series of higher highs and higher lows, and that's what this is. Again, it would be ideal to see it hold this level, the lows from the other day, because it wouldn't take out or violate that previous low. But if it does so, then here's your 1, 2, 3, and that's just on the daily chart. If I zoom back and go out to the weekly chart, turn off all the lines, this shows you gold's been on a longer term uptrend since late 2015. And again, it's a bull market. So in a bull market, you're going to get pullbacks and corrections, and you can look for those divergences. But the bigger picture is the trend in gold has been up now since it bottomed back in late 2015. And so I'm viewing this as a pullback, a correction within a bull market. Also keep in mind that gold is one of the flight to safety assets right behind treasury bonds, and for reasons I've mentioned in some of the recent videos, I have my concerns about U.S. treasury bonds, especially with what's going on with the U.S. government writing checks that I don't see they're going to have a hard time cashing and paying for to support all the stimulus and bailouts really for individuals and businesses going forward. So anyway, so gold may shine from that aspect where people see the old flight to safety. If you're wondering why gold goes up during a correction bear market, you say, well, Randy, that's ridiculous. When am I going to start buying bread and milk and egg and cheese with gold? You know what? Probably not, but here's the thing. For thousands of years now, people have used gold as a store, as a quasi currency or store of value, and it also people tend to flock to it during times of concern in the financial markets. So hey, if it ain't broke, don't fix it. Or I should say, as long as it continues to work and people think it works, they'll buy gold for that reason, because there's really not anywhere else to make money now. That's one more reason for them to buy gold. And at the end of the day, I can sit here and talk for 30-40 minutes about gold and why we're long and where I think it's going. And if they stop it out and it just runs on down through our stops, breaks the next support levels and tanks, that's it. Move on like any other trade. Even though it's the only active trade on the site right now, I still haven't updated. I updated all the short trades last week. I started on the long trades and then got sidetracked with the markets. I still have to update those. The only trades that are still active under the long category is gold. This is the only official long trade we have right now. And it doesn't mean that that's where all my money is. And again, right side of the chart, it's not a mutual fund or a comprehensive investment plan for anybody. It's far from it. It's just trade ideas. And lately, as I said, keeping things light on the market right now. Closed out a lot of all our index shorts officially, the corporate bonds, all that stuff, which are all up today, and so I'm glad I did. All right, so let's go to, or at least the indexes were up earlier. Let's go to this chart. Let's put back on the lines here on the weekly chart. I don't want to spend too much time because I've covered this a lot, but there's again that potential uptrend line and the big 130 level. I showed it to you on the daily chart. If you're wondering why I would be interested in getting back into gold or holding on to it possibly if it runs down there, it was really, it defined this multi-year bottoming pattern right here, basing pattern. Kind of came down here, kind of almost like a big inverse head and shoulders, not exactly, but this kind of like V bottom, and that 130 level was a big level. I talked about it for many times, said once we break it, that'll be a big buy signal in gold, and that was, and we had from there, once gold popped it, it had a strong run, and within the bull added another 22% in just relatively short order. That was earlier, that was some point mid-year last year, so in less than a year it ran up that much. All right, nothing else to add to that other than there's some work to be done to the upside. We go back to the daily chart, and that's a 60-minute chart. Let's go back to the daily chart. Really have to just take out these highs, and so as I said, if we can continue to power up here and start to get close to T3, I'll probably add additional targets, or just say we'll leave that as T3, but we'll add we'll just leave T4 as a runner trade, let gold run for the time being if it can get some traction. Right now I can't say that this isn't anything more than just a oversold bounce. It's really hard to say that on the charts. We start to move up here, power through some of these resistance levels, yeah, that'll be a good thing. All right, let's do this. I'll get to silver and all that. I'll touch on those, but I don't want to spend too much time on there because I'll tell you why. Again, gold is the flight to safety instrument. People, historically don't flock to silver or platinum or palladium, even though those are precious metals. They are precious metals. They have, jewelry. People use them as jewelry, other things, but they also have very large industrial uses. That's why palladium prices had soared in the last couple of years. Shortage of palladium. It's used in emission controls for vehicles. Obviously, that demand has gone down, so palladium is coming down hard, like as to be expected. I'll get to that in a second. But where I was going with that is they have, especially silver too, heavy industrial applications. And if we're in a recession, which we are undoubtedly now, it'll be official when it, once the numbers come out after two contracting quarters of GDP, that's when it's going to be official. But we already know it's coming. So therefore, you're going to see, pressure on those. So I think gold will outperform. I get this question put to me a lot. Sometimes, why don't you see the gold mining stocks rallying lately? There's some days we'll check to see if they're up today. I'm not going to get to those in detail in this video, but remember, gold mining stocks are exactly that. They're stocks. They're not gold. And although they benefit from the rising price in gold, and they should certainly benefit from the collapse in oil prices as well. That was a fundamental catalyst I made back in 2016 before gold bottomed, that oil was down hard, and that was a net positive for the mining stocks as well, because energy is one of their biggest costs. They have labor as a big cost, and the energy to run the equipment, the big heavy machinery, conveyor belts, all this other stuff, to pull the gold out of the ground and then separate it from everything else that's coming out of the ground with it. So you have right now a potential bullish backdrop for the miners, and I will get to those, but they warrant their own separate video. All right, so let's now talk on silver. SLV, silver again, not the precious metal. It's not the flight to safety instrument. Big technical damage done. This was a big level here, about $13. This is a daily chart of SLV. It was multi-year support, a very important support level. And then the other day, silver, you can see it here. Let me turn down those volume bars. You can see it a little better. Silver just had snot knocked out of it. Here, let me do this a little bit more. There we go, right about there. All right, so you can see those candles now, and it's trying to recover, but it's right there. See that's a big gap right here between the close on the 13th to the open on the 16th. That was Monday, so you had a weekend. There's a gap, so that's why I pointed silver out as it's a pullback short trade, rallying right into that top of that gap right there. And you know, again, it may continue to rise after that, but I do favor a pullback right there, as I said earlier. And again, the long-term chart is pretty busted up right now with that break of support. So if silver were to continue to rally up at about that 13 level, that's pretty significant resistance. And again, given the two, gold I think should outperform, because again, it is that flight to safety asset that people have used for, you know, hundreds of years, if not thousands of years. So we'll look at the silver futures chart real quick. I posted that as well this morning right here. We were at 1325 on SI silver futures, and that's it. You can see we had a little nice downtrend line here, broke out of that downtrend line, rallied up, and then boom, hit that level. That level is defined by, it lines up with that gap on SLV that I just showed you, the ETF, but we have a lot of reactions right there. So that was was and still is my preferred scenario. See a pullback, you know, you can short silver with a stop not too far above for a pullback trade, cover on or just above this trend line, maybe even reverse long. Again, with a stop just below there. That's a trade idea. Or you can wait. Maybe we break out. You know, we're having a reaction so far on that level, and if the metals can power up, especially if you see gold continue to move up, silver can pop, and there's not really much resistance on silver futures up here until about 1441, 1442. Okay, and something I talk about a lot, but I like to revisit it. I know there's always you know, some new folks coming into the site. Is the relationship between gold and the US dollar. So we're going back here, this is all the way back to 2005, so we're spanning, you know, well over a decade there. And what you're just looking at now is gold. Now I'm going to add UUP. This is the US dollar ETF, if I can pull it up, UUP. And now what you see are kind of two quirky lines that are, it's what you're looking at is an inverse relationship. One goes up, the other goes down. And again, I'm speaking to the longer term trends, not day-to-day moves, but sometimes you will see that correlation very tight from day to day, but there are periods where it separates. But what you want to look for in a correlation, just the major inflection points. In other words, the UUP is in white, that's the US dollar, gold is in yellow here. You see the dollar was falling, and it had a major inflection point around this time, and gold was rising up to that point. UUP is an ETN, so we don't have any tracking history before back here in 2007 when it came out, but it was in a downtrend, and gold was in an uptrend, and then gold peaked here with a subsequent lower peak right there, right around the time the dollar bottomed. And then what do you see? The dollar ripped up, peaked right here at the same time gold bottom. It's not coincidence, guys. Here's a major bottom, the biggest bottom in gold, the dollar right there in decades, and a major top in gold, the end of the last bull market. This is not mere coincidence. So there's that relationship. It is unmistakable. And if you don't, you know, sometimes I like to do this. I flip it around and show you UDN, which is an inverse of the US dollar, because that takes that negative correlation and turns it into a positive correlation, meaning when one goes up, the other goes down. Because again, UDN is when the dollar is actually falling. So when UDN is going up, because it's the inverse, gold's going up. When UDN reverses, gold reverses. A little top there, pull back. It wasn't one for one. Remember, they don't trade on the same price scale, but they both had a major top here and then drop, and major, well, here's where UDN bottomed, meaning the dollar top, but then the dollar had another high there. But either way, you had major reaction points there, and you can see gold's been an uptrend. And the only thing that's different is there's been in recent years, the correlation's been very tight, but in recent years, and I talked about this, that we've had the dollar rallying. Remember, UDN falling is the dollar rallying, and gold going up. So this is the exact opposite. The relationship split. It was no longer an inverse relationship between gold and the dollar, and I attribute that to very, very strong demand. There's no other way you can spin that but other than very strong demand for gold, with gold rising despite a rising dollar. And the reason fundamentally that this relationship exists, it's not magic, it's simple, that gold is priced in US dollars, at least the gold we're trading here in the US, gold futures, GLD the ETF. Sure, you can price gold in other currencies around the world, but that's not what we're trading. So when the dollar goes up, it takes fewer dollars to buy a share of gold. So therefore the price goes up. And when the dollar falls, it takes more dollars to buy, not a share of gold, I'm sorry guys, an ounce of gold. So when the dollar falls, it's going to take more dollars to buy an ounce of gold. Therefore gold becomes more expensive. That's why that's a very simple relationship, and it's almost an unmutable relationship. But again, there are other factors that come in, such as supply and demand, besides the dollar. So this told me that a lot of people knew the bull market was getting too long in the tooth, and a lot of money was moving into gold. And that's why gold was in a bull market the same time the stock market was. All right, so now that that relationship has been established, all I want to say is that we'll look at the dollar now, and that could continue. We could continue to see the dollar rise and gold go up, as it has been now for the last couple of years. But what really, something I really like to factor in or have you think about is, what if the dollar has put in a major top and then starts a bear market? That would be a net plus, undoubtedly a net plus for gold, and it leaves the potential for an explosive rally if a lot of the money is still coming out of the stock market in the coming years. Let's say we are in a recession, bonds are really not looking attractive. Stocks don't look attractive, and there's still a lot of money sloshing around the financial system. It's not just the Fed. All the big global central banks have injected liquidity into this market. That money's going to find a home. It's not going to go under people's mattresses. There are a lot of people that don't want to dig a dugout in the backyard and and grab an AR-15 and stand over all their money. So the money's got to find a home somewhere, and gold is a likely place. So if we can see, if we do see a top in the dollar and the dollar starts a new downtrend, and what could cause that? Well, this crazy spending that the U.S. is going to have to, and the thing is, currencies are all relative. So yeah, we're going to have to spend a lot here in the U.S. To stop the collapse of the financial markets, stimulus packages, Fed printing money, all that good stuff. But then again, so are a lot of the other countries out there as well. They have their own problems, and so currencies are all about, it's all relative. Whose house is in better financial order? Is it the ECB? Is it the Fed, the Bank of Japan? And that's what determines this. And of course, where rates are at. If we're at zero, which we are now, but then in other countries at negative 0.5%, well, our currency should be worth more because our interest rates are higher. So those are all things that go into it. But let's look at the charts here. I've been making the case for major top in the dollar for a long time, and I think it's here. But we had recently, and I did post some articles, or at least a link to a Google search to explain what that means and why it's working that way. And that was what you see here, this crazy move in the dollar. As this whole thing has morphed into a financial crisis now, there's been a shortage for US dollars, and therefore that's caused a sharp spike. So it looked to me like the top was already in, and we had a big spike up, and the dollar is still at this high, but the fundamentals the technicals haven't changed. You had divergence at that last high back here, and you still have negative divergence. So I think the case can still be made for a major reversal in the dollar. We'll just have to watch it. But like I said, it's the gold trade is not completely contingent on the dollar falling, but it would most certainly help. I like to use, when charting the dollar, I like to look at the euro US dollar pair, and the same case that I've been making for a while. Let's go to this weekly chart on the euro. This most recently, you can see positive divergence right here. We had a divergent low there. We started to go. We put in this marginal new low right here. We still have positive divergence, so there's still the potential for a major trend reversal here. What happened on that last rally? We got checked right here. That's a key level, the 115 level in the euro US dollar pair. Look at that. That was the top of this multi-year trading range right here. I'm making a big mess with these drawing tools, trying to get a box tool. Multi-year basing pattern there. We broke out, rallied, put in a divergent high, corrected, and that level is still a very significant level. So what we need to see is the dollar or the euro reverse and start climbing against the dollar and then break that level. Then next resistance, if that happens, and I think if that happens, that would be a major breakout, and we'd run up to this trend line, long-term downtrend line, hit that, maybe get a reaction, then move up. If you saw anything remotely close to this, the euro, US dollar coming all the way up here, here, that should be very bullish for gold. So I just wanted to it's a lot of time spent on currencies, even though I don't really trade them that often. Once in a while I will. You can trade FXE, to the Euro ETN, or as I showed you, UUP or UDN. Here's E7, the Euro futures, a little bullish falling wedge pattern on the 60-minute chart, breakout right here. So this is near-term bullish right here for the Euro, which is near-term bearish for the dollar. That breakout of this bullish falling wedge pattern. What happened here? You had an uptrend line, it broke, and once it broke, that started this. That was a catalyst for this downtrend there. You can also look at dollar futures, DX, right here. That should be, yep, that's my DX chart. Let's go take it down to a monthly view. Let's go down here, 1 month. There's your uptrend line right there. We put in a divergent high right here recently. See the negative divergence there on the dollar index. And we haven't been moving down strong, but I think we walk on down here. And if and when we break this trend line, that would be a more powerful sell signal there, and that should help gold, because again, that would be a falling dollar. This is the dollar or dollar futures. So there's the U.S. dollar directly. PALL warned of a major bear market coming in PALL. It got extremely overbought, and as I said, it was contingent on the economy rolling over, because I said the automakers, as long as they're humming away and selling, auto sales have been at multi-year, really multi-decade highs, at the high end of the range, and it was only a matter of time. It's just like I talked about, the unemployment rate being at record lows. I said that's where all recessions begin. They begin with the economy chugging along, firing on all cylinders. Yet recessions don't start from high unemployment. They start from low unemployment. That's where the top is in. So we had, same thing with the auto industry. Now that auto sales are going to come to a screeching halt, so is the demand for palladium, because they're not going to be making as many catalytic converters and various emission controls for all the vehicles. So we can see we've already dropped about 50%. So the price of palladium's been chopped in half. This is just the ETF PAL. We overshot. This is what I call momentum fueled overshoot. I had that target there at 150.56. We briefly overshot at one. This is a weekly chart, by the way, last week, and we're back above it now. So if you're wondering, no, I wouldn't short palladium here. Probably bounce if we get a back test to this the trend line and or that 40-week exponential moving average. It looks like it's done a good job. This red line right here in a bull market, in a bear market, you can see here it acts as resistance. Boom, boom. Boom. And then when you get above it, you're in a bull market, just like a lot of tech stocks and indexes. I like this 40-week exponential moving average on a weekly chart. There's a bull trend. Tells you buy, buy, buy. A little whipsaw there. Kind of moved through it a little bit, but again, pulled back, support, and now it's broken. So what I like about this, you have dual resistance levels overhead. You have a very clean uptrend line and that 40 weeks. So if we get a little more upside here, there's your short entry, objective short entry. I don't promise it'll work out, but I promise you it looks objective to me to short it there. You're going to have to use pretty wide stops because everything's volatile in this market, but that would open the door for the next target down there, about 122.81, and ultimately at minimum before this bear market's over, I think probably down there to 107. So plenty more downside. And if you think you're crazy, Randy, this thing's already fell 50%, I did an extensive video. You can find it. Just go to the below this post at the bottom. You'll see all the tags. It'll say tagged and then a semicolon, and it'll have all the symbols, the ticker symbols discussed in this video. So if you click on PALL or the forward slash PA, which are palladium futures, you'll bring up all the videos that I've ever, or all analysis, and even individual static charts that have covered palladium on the home page, and you'll see there was a video, and I've talked about that. And where I'm going with that is I went back for decades and showed you the previous bull and bear markets in palladium. The bull markets are phenomenal, and the bear markets are all just as powerful. They're usually about a 70% drop once palladium goes from a bull market to a bear market. So we've only fallen 50%. So if you think my call for a drop off the highs of You know, down here 60% is excessive. Again, just go look at that old video or pull a long-term chart of palladium yourself, and stockcharts.com will give it to you. $ palladium is their symbol. I believe it's $ palladium or $PALL, one of the two. All right, let's look at the other one. Let me just look at the daily chart, see if there's anything else there for you. There's a potential trend line that's being, that's probably that same trend line on the weekly, a little more upside there in that 170.81. There's a level. The 200-day moving average on the daily chart's the same as that 40-week. So I'd go off that weekly chart, I think. And then PPLT, platinum, the other shiny metal. This one is just given up all trend lines. There was a trend line right there, gap down below it after a little bear flagging action right there. See that bear flag? Perfect bear flag pattern. There's your flagpole from here down to here. Little flagging action. Gap down below, took out the trend line on the gap and never looked back. Just gap city all the way down. A lot of gaps on the way up to backfill. I wouldn't short this one here. Do you want to go long? I can't make a screaming case. Like I said, I just, gold's a little safer bet right now. I think because of that flight to safety and liquidity too. There's another reason for GLD. It's very liquid. And that's about it. Just leave it here on the 60-minute chart of gold, since I covered the the futures, and again I know a lot of you don't trade futures. I like a couple things I see here. I like to use the signal line, which is the 9 EMA on a PPO on just about any time frame. Works well in the 60-minute when it's the white dash line there. When it's above this zero line, here's your zero line, the dash solid horizontal line, and then the dash white line here is the 9 EMA, and you can see what I'm doing here. When it's above the zero line, the trend is bullish, and there was a whipsaw and it remained above, other than one little whipsaw remained above right there, and then when it's below, it's bearish. There was a correction, and again bearish on this time frame. It's an intraday chart, shorter term time frame. Bullish, and boom, solidly below, and we're back testing now. So here's the thing: if gold can regain, if the PPO can pop above that level, that should confirm that trend indicator. And if gold can move away from this 145.50-ish level right there, it was very good support, or pretty decent support I should say. We broke it right here, rallied, back tested it once and failed, and back tested again and failed. So now looking at this, and I didn't look at this earlier, and I'll tell you now, this is sometimes why I like to do these videos. I look at different charts. I'm not as keen on a pullback trade at this point. Why? Because we already tested it once from below and failed. It's usually that initial test that you get the short pullback trade on. Now we've powered up, we're above it. So far we're holding there, and so that would be bullish. If gold can start to move away, take out today's highs, does open the door for a move up here to the next, there's a big old gap right here to be tested and even maybe backfilled. However, we're still close enough in proximity to that level, we could still get rejected. So if you did short for a pullback trade, just keep your stops relatively tight, because gold should pull back now. Otherwise, if it powers up, it may keep on going. All right, and like I said, that's all short-term stuff, not to be confused with the intermediate to longer-term outlook, which right now to me is still favorable. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.